Welcome everyone to this Xoogler community meetup with Qasar Younis. I'm here in his office in Mountain View. I first left Google in 2015 and we first met around the corner. That was by Combinator's office. This is probably April in 2015 when he was still the chief operating officer. So Google acquired his company called Talkbin. He was there for 3 years, served as a group product manager, and Paul Graham asked him to come back to YC as a part-time partner initially, then he joins a full-time partner and a chief operating officer. And he was there for about 3 years and decided to do a startup again as he loves doing. And so we're here in the office of Applied Intuition in Mountain View. They have offices around the world as well. And I'll get him to introduce what Applied is. We want to focus on his company. We're really here about focusing on you and how you can transition from.
You can look up what Applied is online. We don't need to.
We don't need to talk about Applied, but he's been running this company for also 3 years and
6 years.
6 years now.
Yeah, about 6 years.
Wow. Yeah. So a very, very long time now. So
I think it's technically now my longest job I've ever had in my life. My last long job was General Motors for 5 years. So
oh my God.
So I think as in January of this year, this is the longest job I've ever.
And how long will you be in this job for, Qasar?
As long as I can. Last night I was talking to another Googler, Daniel Graff. I don't know if you remember him. And he asked me that question too. And I have nothing else to do. I don't want to invest. And I've already done investing thing. And I don't see myself going back to like a FANG.
Yeah.
And I think it'd be hard for me to work at somebody else's startup. So all those things, a process of elimination. And then this business specifically, it's my background really, my automotive roots. Really,
automotive roots, grew up in Detroit, made perfect sense. So your dream job.
I'm here probably for as long as they'll keep me as well.
But anyway, enough about Qasar, but you can tell that he's very passionate about startups. He's worked with a lot of startup founders, invested a lot, but he's found his calling being a company CEO, and he's advised me and the Xoogler community on so many different topics around startups over the years. So we're here about to talk about why you should consider doing a startup and perhaps what are the things you need to do to transition from Google to startups. But before we talk about launching a startup, the first topic I want to make sure we cover is if not thinking about doing a startup, but joining a startup. In many ways, Qasar's always told me that one of the best ways to prepare yourself to do a startup is actually to join one early on and see what the progress is like. So let's talk about, for any of you who are thinking about joining a startup initially and not doing one, and we'll go to doing one very shortly, but Qasar, what advice do you have for people who are thinking about joining a startup from Google? And
a question commonly asked, and just for context, like I think something like half of the people that applied come from Google. So we're unique in that sense that we've hired a lot of Googlers over the years. Obviously, Peter and I, the co-founders, we were Googlers. When I was starting off, I said, anytime we're not using Google products, I really mean that. I really love the company. And even with the current, issues that the company's going through, I think generally, by and large, the company's just trying to do the right things, right? And you can't actually say that about all companies. So that's a little bit of a caveat. So often folks from Google say, okay, well, how do I make that transition? And more specifically, how do I have 5 startups in front of me? Which one's good? Which one's bad? So the way that I would structure the answer first is you want to figure out what stage you want to be in. This is maybe more important than anything else because the stage impacts everything else. It impacts compensation, impacts role, impacts growth. It impacts a lot of things. So think about the stage of the startup on a spectrum. On one end, you're the founder, and on the other end, it's Google. And there's everything is in between. And so people get into semantics of seed, pre-seed, A, B, et cetera. I would just think about early stage and kind of mid and late, regardless of what they're called. And companies, it's kind of like the Big Bang in the first 100 milliseconds of the universe. It's quite different than the first year, which is quite different than the first million years. So the first 10 people. So the way to think about companies is there's under 10 employees, 10 to maybe 100 employees, 100 to about 500, and above 500. And those are kind of somewhat arbitrary. Again, it's a spectrum. But the under 10, you are essentially the closest thing to being a founder without taking the full risk. And the full risk of being a founder is you can't leave the company. Employees can always leave. You join a company as employee 8, you work there 6 months, you're like, startups aren't for me. You can just go back and get another job. As a founder, that you can't do that. Your reputation, a lot of other people depend on you, et cetera. So that's the reason you go to the 0 to 10 is you want to be a founder. That's the reason to go to 0 to 10. 10 to, let's say, 30 or 10 to 100 is and really I would say 30 to 100, you're starting to decrease some risk. By that time, the founders have probably raised money. They probably figured out how to figure out compensation. You can look at the other 10 or 20 people in the room and say like, are these people like me? And that can be a good proxy if you should join. For our company, for the first time, I think something like 8 of them were Googlers. So if you're number 11, look at the company, you're like, okay, these people are like me in the sense that they're going to have similar things to me. Now, there are bad things about Google culture. We'll talk about that in a little bit in terms of how to expect, if you're not going to a startup, how to make that transition. But that's the advantage of that. Now, the good thing about the 10 to 100, 30 to 100 is you can still basically pick your role. The roles are not defined. The functions are not there. A lot of opportunity, and you get a lot of the true, I would say, true startup experience without the extreme risk of, let's say, 0 to 10, where a lot of those companies just don't make it. 100 to 500. Now you're getting into mid, late stage, and almost mostly late stage. Those companies' functions are defined, tend to be titled. Compensation tends to be a lot more closer to market. And you tend to still have equity upside in the sense of if a company's worth 100 to $1 billion, there's still, up to 10x plus upside, if not more. And so again, you're just playing with that risk and reward. And then above 500, frankly speaking, it's just like working at Google. In the sense that you're a subdivision, you're not going to work with the founders directly. You probably have a function that you're spending all of your time in. So figure out what stage you want to be. Now that you figured out what stage you're in, let's say you have 5 startups that are at the Series A stage. So you figured out you want to do the 50 employees, you have 5 50 employee companies, and you never worked at a startup. How do you kind of figure out? And also this is for future founders. You should be listening to this because this is how your own company will be assessed by recruits in the future. So if you're let's say 50, 5 Series A startups, you're applying, you're whatever, a SWE or a designer, kind of typical Google PM. The first thing I would do if I know nothing about the companies, I'm immediately looking at who the investors are. And the reason I look at the investors and kind of cheesy, crappy answers, they are way more calibrated. And they end up being, and this is where life kind of isn't fair in the sense of the best investors get to pick the best companies and the best companies go to the best investors. There is some signal, there's some matching that happens there. But that's just what you have to do. Again, under the context, you don't know anything about startups. The investors to look for are the best investors. The best companies tend to get the best investors. So let's say you don't even know who are the good investors. Okay, so then you actually figure out when you go to a company's website and say, we're backed by Andreessen Horowitz. You go to Andreessen Horowitz's website and you look at who their portfolio companies are. And you can start getting a proxy. So you might run into Bain Cap Ventures. Are they good? 8VC, I've never heard of them. Okay, so that's kind of how you do that. Once after that, the second thing I would be looking at is who the founders are. When I was at YC, I would really focus on markets actually for employees. But the older I am, the more I spend time in startup land, the founders have a really huge impact on the day-to-day culture. And you have to see however these founders are they resonating with me? Then beyond that, then you have to look at the actual market. Do you, as a professional, believe it's growing? Like you have to use your own analysis. You ask other people who are in the market, autonomous vehicles or crypto or whatever, generative AI, whatever the thing you're in, and you kind of learn from them. Okay, what it is about this market? Where does this company fit in this market, et cetera? And then the last thing I would do, again, if I don't know anything about, I would talk to ex-employees or current employees about really what is the day-to-day like. And that'll help you figure out, where it is. And then, of course, from there, you do the normal interviewing, comp, et cetera.
So I've got 2 follow-up questions on this part of our discussion. The first is, you mentioned you follow the best investors.
Yeah.
There's been a lot of discussion around how sometimes the best investors also make mistakes.
Oh yeah, all the time.
Human. So how should someone calibrate looking at the best investors and who they invest in and potentially joining them, knowing that sometimes these startups do blow up?
Yeah, this is the framework I'm describing is like a weighted, it's like a weighted, formula rather than like an order of operations, one investor, et cetera. So just take them all under these are inputs, but they're kind of fuzzy. And then in certain conversations, the investor is going to be more certain, they're going to be less important. One thing is absolutely true. You take the best of the best. The Andreessens, the General Catalysts, I'm just naming my own investors. General Catalysts, the Lux, the Sequoias, the Y Combinators, et cetera.
Kleiner Perkins,
yeah, KP, great firm. If you take all of the fundamental truths, if you look at their portfolios, most of the portfolio ends up failing anyways. 50%, 60%. So it's not just they're an Andreessen funded company, therefore they'll be good. That's not how it works. and what you're sensing there is the risk in joining a startup. You're like, okay, well, this is certainly not a guaranteed thing.
So the second question I had was talking about compensation.
Yeah.
If you're going into a company between 10 to 100, a lot of people are used to the Google compensation. How should they recalibrate?
Yeah. So, the reason I don't like reporting things is because I say like, the sharp viewpoints and then like they're going to be taken out of context. But I'm wading into the dangerous water here, shark infested water, because things can be taken out of context. So please don't abuse it and don't take it out of context. So what I'm going to say next is it has some sharp viewpoints. But generally speaking, Google compensates incredibly well, and it's generally speaking work optional. And that's probably true for FANGs in general, in the sense of like, if you have something happen in your life and it's legitimately like a health issue and you're gone for 3 months, the company doesn't collapse.
Yep.
Right. Also, the opposite is true. If you just have a person who's just not contributing, they're completely healthy, they're at work, and they're still going to get that high compensation. That generally doesn't exist in the rest of the world. And that's something that you kind of get in this incubated environment of Google and the Bay Area, broadly speaking, FANGs. In startups, so what I've said before to folks who, like I said, so many people at Applied come from Google, like hundreds of people at Applied come from Google. And the conversation I often have is, why we're recruiting Google? Because we obviously think very positively of the company. Otherwise, we wouldn't be recruiting a majority of our employees from there. So it's not to be dismissive of Google. I think Google trains you on a lot of great things, but that's not what we're here to talk about. Yep. Google trains you about how to be a professional, how to build scaled systems, how to work with designers and product managers, et cetera. So all that to the side, I tell them this is like the scene in the Matrix where it's like, Neo, you've only lived in this fake reality of work. It's like at Applied, you're actually going to work. And so what does actual work mean? Actual work means is you're just held responsible for outputs. You just get no credit for showing up.
Yep.
And I think that is a transition that sometimes are easy to say, easy to understand, especially if you're only at Google for 2 years. You've been in other companies that might be a bit more of a grind out. And you're like, okay, I get that. I live in a reality. But if you've been at Google for 10, 15, 18 years, you live in another economy. Google's its own economy, its own products. It was like when I left Google, I remember thinking, oh, wow, there's product launches outside of Google. Like you just don't even care about what else is happening. And then I left YC, I was like, oh, there's startups that are not YC funded. Like, so you get really into the community and the ecosystem that you're in. And I think if you, as a person who's been there a long time, you just have to mentally know that coming into this atmosphere, as you ascend into the atmosphere, like from as a satellite, there's going to be burn up. It's going to be painful.
So just calibration is what you're saying.
Yeah.
Okay.
So compensation, to be more direct, tends to be lower. Frankly speaking, what you can't be in this situation is the view is just like, okay, well, I had this Google job and I want the Google job again.
Yeah.
And it's like, I think just having that like rationalization. Now, the truth is, especially if you go to startups, you could actually have much larger outcomes than you would have had at Google. And that's why I've always been a proponent of early stage startups, is because that's why Silicon Valley runs. Silicon Valley doesn't run because of Google, actually. It runs because of the early stage ecosystem, which becomes companies like Google and all the people of equity who then grow and then have large, significant compensation outcomes.
So let's use that as a transition, actually. We're going to move from working at a startup to starting your own company after Google. Yeah. You talk about Silicon Valley and the reality of it's run by startups.
Yeah.
Can you talk about what's so special about this whole place? And a lot of people who put it at this time so they can join from Europe. Should people from Europe still come to Silicon Valley? And remote is so much acceptable now. A lot of investors are going to Europe. Or what are your thoughts on that?
Yeah. So at YC, I was the group partner for GitLab. I was the one who wrote the check on GitLab. It was the first remote company that went public. I've known the company really well for many years. So remote is great for a set of companies, and I think as we go further into, let's say, post-COVID, I think you're going to see more of that office work coming in, just because there are advantages of being like, we could have done this remotely. There's something nice about being in the same room, seeing each other. So you have to figure that out yourself. If you're Europe, you want to be remote, you want to be a European company in-house or likewise. My view generally, though, is you fast forward 5 or 10 years, Silicon Valley still has a huge role in software. I did my first company, my first startup in Chicago. In 2010, 2005, people were talking about Chicago's the next thing, Chicago's the next thing. 2023, people are still talking about Chicago's the next thing, Chicago's the next thing. That's always the case outside of Silicon Valley. There's always discussions about what the next Silicon Valley is. I think in Silicon Valley, you do just have the people who are kind of the most serious about their work. And they've, no, it's not easy to move around the world to a super expensive suburb where the highlights are, Panda Express and Chipotle. Like this isn't living in Manhattan. This isn't living in Tokyo. This isn't living in LA. The suburbs of Mountain View are boring. So people are making that trade-off. Why are they making that trade-off? They're making for their professional life.
It is getting more interesting though. They're better shot these days.
Yeah. So I think Silicon Valley still has a big role in the future.
And so if you're in Europe, do you move here? Do you actually do a startup that's perhaps not where Silicon Valley has its pure advantages? They perhaps look at the biggest Berlin consumer, London fintech.
Yeah, the biggest reason I would move here if I was in Berlin, I would say on every month I have a conversation with the European founder about this. The biggest reason I'd move here is just easier to raise money. And that's the fuel, that's the oil, right? So if you were in the oil drilling business, you can drill oil in Utah, or you can drill it in Saudi Arabia, or you can drill it in some high potent places. So I think it's just easier to raise money here, and then it's easier to scale. There's a lot more. I mean, within 25-30 minutes of here, there's probably 50,000 software engineers.
Yep.
That's just not the case in
the recruiting,
where else? Everything,
fundraising, and so Zoom meetings,
and then some things like you're hiring a marketing person or you're hiring a lawyer. You don't want just a marketing person who worked at Frito-Lay or worked at Nike. You want a marketing person who worked at Google because they know software marketing. Or if you want tech law, you want someone who's practiced law within the tech environment.
Yep.
Not just legal for Coca-Cola in Atlanta.
So the topic we have is moving from Google to startup land, right? So you were at YC for many years, so you saw a lot of people transition with the help of YC into the startup land.
And I was a YC founder before.
And you were a YC founder before. You transitioned yourself from being an executive at a financial services company in Chicago, went to business school to the startup world. So you did it yourself.
Yeah.
If you don't apply to YC or don't get into YC, how should someone prepare themselves for startup land?
Starting company. Without
going through that process, right?
So outside of getting funding from an accelerator like YC or something like this, or a seed fund, I always think, I've said this before on other Xoogler talks, there's an order of operations to startups. Number one is finding a co-founder. So if you're out there, let's say you're impacted by the recent layoffs, and as an example, and you've thought of starting a company, and you're like, well, I don't know where I'm going to start. This is completely daunting. I was at Google for 6 years. I have no idea what the next step is going to be. The first thing I would say is you're kind of like out in the ocean. You're just floating, and you need to find a like-minded person that can be your partner in this endeavor. And ideally, too, I've always been a fan of 3-person startups. It gives you a bit more wiggle room in terms of skills that all three of you need in order to build a company. Ideally, the skills fall into 2 buckets. One person builds it, one person sells it. And you have to be one of those two in a founder. It's either writing software or building the thing that you're building, the hardware thing, whatever it is, or you're selling the thing that you're making. So now if you found a co-founder that you've ideally either worked with or you've known for a long time, which reduces a lot of the risk, then you pick the general market that you're in. And market is different from the idea. So market is, hey, us two are going to start a company. Communities, I know autonomous vehicles, I know, product management. Within those things, we have to find an idea. And because that's going to use your skills, it's going to use my skills. And so what often people do is they just come up with a market and then they try to find a founder. Or they come up with an idea, which is a derivative of a market, and then they're going to try, and that's incorrect. So the reason I say find a market, so Peter Ludwig and I, my co-founder was ex-Google, we did this exercise 7 years ago. And we did okay, what are you good at, Peter? And what am I good at? Peter's a compiler's PhD dropout from University of Michigan, and then was at Google working on Android automotive. So we both know the car business, and there's an immediate connection there. And so, okay, well, in the car, and we both also work in Google Maps, like in the car business, there are things we can do. And that naturally led us to what became applied intuition. So we picked the market. Then from the market, then you pick the idea. So
the background of the founders, the market.
Then you pick the specific problem you're going to solve. When I say idea, what I mean is a problem you're going to solve through software. I have a heavy bent on software, but rather, I was a mechanical engineer who became a software engineer, and so I have the zealousness of a convert. Truly, I believe in software. That's where you get most leverage, et cetera. So then you have an idea. Now you have to figure out a problem, I should say specifically, that you're going to solve. That's the idea. And then you have to figure out, are there many people who have that problem, and are they willing to pay to solve that problem? And they can pay through time or money. All this stuff's super abstract. We could spend hours on each of those individual topics, but that's kind of the summary version.
We'll sign you for a masterclass for this one day. So I think a lot of people on this call would know about their backgrounds, their strengths are, they'll know about markets that are interesting to them, where they perhaps have the expertise.
Can I mention something that just popped in my mind when you said backgrounds and strengths? One issue that I feel Googlers have, regardless of they're starting a company, finding a startup to work in, or going to another FANG, is often they conflate Google culture with their own culture.
Interesting. Can you dig in deeper? What do you really mean by that?
All these things that make a Google person, right? And if I was being cynical, I would say generally pedigreed, generally professional, generally like calm, like
not good things being a startup founder. Is that
No. I think that those are good, but I think it's in the startup land, the thing that everyone really values is like tenacity, pragmatism, grit, aggressiveness, etc. And so your own personal skills and the things that your people assume about you when they see that you worked on cloud for 4 years, or you worked on maps for 8 years, you have to really kind of separate those things, because the people are going to look at you through that lens, and the lens of the brand and the product that you are in, and the assumed culture that product had. And so kind of split that out. So within your own culture, figure out how gritty am I, how durable am I? And then also, just frankly speaking, what are my weaknesses? The amount of Googlers that I meet who don't have a healthy understanding of their weaknesses is startling. And I think a lot of that is because of the somewhat passive aggressive nature of Google. And that's positively positioned as being googly, but there is a downside of that.
So how do you unteach it in your own company, since you have a lot of Googlers?
Yeah, that's a great question. We from early on, we talked about it a lot when we were the first 5-10 employees. And then we wrote our 10 values, which in some ways were reactive to our Google past. And they were about speed, and they're about customer orientation, things that Google is like. One way to figure out, if you've been in Google so long, it's really sometimes hard to understand what are the Google cultural things. You juxtapose Google with Apple, or you juxtapose Google culture with Amazon. Amazon people yell at meetings. They are, when they did the layoffs, they didn't even make an announcement. They just laid off a bunch of people. Like, it's just a very different culture. Then if you compare those, you see the differences, and you're like, oh, this is what it is about Google. But in terms of weaknesses, just to be really, just to hit that nail on the head, I feel like you as an ex-Googler need to have some just direct conversations with people who you spend a lot of time with. Like, hey, what am I not good at? So you don't take a position. If they're like, hey, you don't handle stress well, or you don't like, nonlinear, work, going to a startup is not going to be the right thing. It's just not going to be the right thing. So we just the last point, how do we unteach it? We really start the recruiting level. So the recruiting level, we're already filtering folks. And one thing that I've often said, we have, like, let's say 25 recruiters in the company, and we do essentially recruiting onboarding. One thing that I say to recruiters is Googlers are like lions. Like, literally, they're strong, but most lions are in zoos, and they're expected to have a steak thrown over the wall at 5 o'clock, and they lay and sleep most of the day. Lions in the jungle have to hunt, and some lions will make that transition, and some won't.
And again, he's not talking about everyone.
He's not talking about everybody. Absolutely, yeah. Just out of context. But this is like how startups are filtering.
Yeah. Right.
And what the startup is really saying there is, if I give you an ambiguous task, you're just going to get it done. So and whereas in a big company, and this is not only Google, in a big company, you have real silos of like, okay, my metrics of my role are X, Y.
So I just want to dig into what Qasar just said, not only for people who are looking for jobs and startups, but I constantly hear this, I'm sure all of you are, who are fundraising, that a lot of VCs have this misconception that ex-Googlers are terrible founders and unvery good as founders, which we all know it's not true.
Yeah. So it's kind of like the Harvard MBA thing, where it's like, it's just an easy punching bag. You can, but the actual evidence is contrary to this.
But you as a founder need to overcome it.
Yes.
That's the important thing. So how should someone be able to say, no, actually, I worked at Google for X years, but I'm actually aligned that can hunt.
Yeah, exactly. I think a lot of that is in the words that you say and the positioning and I would say the reaction to questions. Just at that high level, the biggest weakness, the biggest difference between like Google culture and startup culture is going to be in startup culture. It is a no frills focus on the customer. If the customer doesn't get value and is paying me, it doesn't matter how much.
Especially in today's funding environment.
And so VCs are looking for, hey, do you live in reality or do you live in in the Google economy? And the Google economy are like things like, to be the most cynical, it's like, why do you want to do this company? It's like, well, I want to make the world a better place. And that can be your earnest reason. That's the reason I started Applied. But what a VC wants to hear in that, or what an investor who's buying stock is, they want to hear you talk about the business.
Yes.
They want to hear you, what product you're going to build, how much you're going to sell for, and how much money you're going to make.
Yes.
And so those are kind of some of the filtering that happens both in recruiting and from the VCs and trying to figure out, is this Googler? Can they handle the startup world, which is a bit more pragmatic?
So I want to go back to, you talk about the background, the market that you should look at, but the idea and also the problem. Can you talk about a few action steps someone should go out and do later today?
Yeah.
If they want to explore doing a startup, what are the things they should explore ideas? How should poke holes?
Yeah. I think you should only be playing in markets that you have some experience in. So let's say you worked, what's a more obscure, let's say you worked at
what if it's not an interesting area that you have expertise in, or it's
let's say you worked on some internal. Well, search is like super interesting right now. I think
now it is.
Everything is interesting. I mean, maybe I just have a different perspective. I think even if you worked on, like, let's say some proprietary database for, for some service inside of Google, right? There is still interesting things happening in that universe. It's not you're going to do the exact same thing, but now you understand a sub-technical area that you can maybe apply. And infrastructure broadly is just such a huge area. So even I would say, quote unquote, non-sexy, far away from the consumer products, I think are super interesting. Applied intuition is kind of like falls into that category. Yep. So I would change the perspective a little bit.
So I'm going through the Dory questions, so feel free to go put your questions there or upvote stuff. Let's iterate your answer to that question. The first one, right? How important is it for someone among the founders to have past experience in the industry and vertical, which is target segment of your startup? You focused on this very clearly, your own startup, but also telling everyone, but how important really is it? Is it just critical and they should hire someone or try to find a co-founder immediately?
That that area? It depends. It really depends. These are unsatisfying answers, I know. It depends, because the thing about the startup world, in my mind, I can think of examples of every variant of that pretty quickly, just being around lots of companies. Generally speaking, I would say having deep expertise in the market will prevent you from making obvious mistakes early on. But that doesn't guarantee your success. The advantage of not knowing about the market is you approach the problem with truly fresh eyes. So the ideal is the co-founding team has those components. One person who's never worked in the market, one person is a market expert. And then they can debate each other, like, oh, why don't we do this? Why don't we do that? Why don't we do that? Let's imagine you worked at OpenAI for a few years, or you worked at Google on DeepMind for a few years, and now you want to start a company in the generative AI space. Like I think next YC demo day is just going to be, OpenAI for X. Yeah, exactly. It's like generative AI for X. So if you have one person who's really been deep, literally has worked at DeepMind or worked at OpenAI for a bunch of years, one person who doesn't know, that's actually a very interesting set of conversations, because the person who doesn't know can really say, oh, I want to make this. And then the person who has that market expertise is like, well, these are the reasons why we can or can't do that. And you might actually come up with something new. It's just like, how do you come up with new startup ideas? I've always thought of the best way to come up with startup ideas is actually look at things outside of the tech world. reading things outside of the business world and then reflecting on it.
So you've always advised me to not get too much involved in the hype. And we're clearly in a very, very big hype cycle regarding ChatGPT, generative AI. Should people
it's the new crypto in the sense of it's
the new Web3.
How many minutes do you have to go in a conversation before it's brought up? And the earlier it's brought up, the higher in the hype cycle it is. And the fact that it's brought up in basically 100% of conversations is
at least you pushed out in 35 minutes in. But should someone look into this space? Is it too late? Is it too early?
Nothing is too late. Nothing is too late. To take Google as an example, Google.com as an example, when Google.com started in 98, two companies had gone public in search. And search, again, is up for grabs. It's never too late in that sense. The big mistake actually in startups is actually the counterfactual, which is most startups are too early. The strong PMs and strong squeeze, they know their area so well, they're already looking into the future a little bit, and they look too far, and they build something that is too early for the market to adopt. And so I think actually a sign of a good idea is one that feels almost too late.
It's interesting, right? Yesterday we had Clay announced that we're going to work in the AI space for business. So you can talk more about what you're most interested in generative AI, whether it's internal tools or
Brett Taylor, yes. You mean the old the Salesforce side?
Yes, Brett Taylor and Clay are combining forces to do a startup.
Got it.
So
I saw something in passing, but I don't know the details. Yeah.
What's interesting to you in generative AI? What's not too hypey yet?
Yeah, I don't know. It's not my day to day. We do synthetic data here, so there's some part of some cousin set of tools there, but I don't know the real answer. I'm not close enough into it. I think there is something to be said that this Transformers work is now 3 years old. It's not exactly. It's more to 2018. So it's a real amount of time ago, and it's existed. There's people at Xooglers who might be on this call who worked on that stuff inside of Google. So why is it suddenly center and focus now? Is because there's a very compelling demo, and everyone can understand it. So that ends up being a big reason that I think it's captured the general public's attention. And by the way, one of the main reasons it's captured a lot of people's attention is because there's people who are not in the technology business who are seeing this for the first time.
Yes.
So the folks who've been in the business, they've already seen some of these demos in advance, and it's not as new and fresh. But I don't know what the answer is. I really don't.
So for people who's a newbie, they have an idea. What are the next 5 steps in the next 3 months? They've never done startups before, haven't hung around people doing startups.
They have a founder, they have a co-founder. I wouldn't do it as alone. So that's just for me as a non-starter. It's already null. So you have a co-founder, you picked a market. Now you have an idea. You have some idea what you want to do. Is that the context?
The context is they have an idea. Yes. So what are the next 5 steps? And then the co-founder, let's say the co-founder question is off the table.
Yeah. So next 5 steps, I think you're a true founder is made not when they decide to start a company. This is my own view. This is not all these are my own views. None of these things a bunch of these things I'm sure are wrong. The first thing I would really figure out is along the lines of having that customer interaction, because that's actually the biggest mistake you can make is you can build something that nobody wants. And so I'm trying before maybe I even write software to validate a little bit of the idea. Sometimes you can't validate the idea without actually having an MVP. Then I have MVP. Once I get some insight from those customers, and each product is different, then I'm having a conversation with an investor, because immediately the investor is going to ask, what have you learned? And if you're like, I just have this idea, and they're like, you haven't learned anything? It's like, okay, well, go learn something and come back and let's have a debate on, is the thing that you learned actually important? And that's the thing, when a founder really becomes a founder is when they learn something from a customer, and if they interpret it correctly. There could be 10 of us, we could see the same user interview, and all 10 people interpret the user interview incorrectly. One of those is going to be the correct answer. 9 of them are going to be less optimal than the most correct answer.
So go deep in this learning and also how to communicate with investors. I hear that's perhaps important in terms of the learning.
Yeah, the way that one of the questions I always ask, and this is almost reflexive, is what's something that's surprising that you learned? And the answer should be legitimately surprising. It's hard to fake that because if it's obvious, then you probably didn't even need to have the customer conversation. And that market is probably already being fulfilled. And that is the real smoke and mirrors of early stage. if it's really an obvious problem and there's an obvious solution, it's already being done. So what about this illusion is incorrect that we have to kind of get behind and say, like, you take the AV simulation space. I can give you a very specific example of applied intuition. When you're starting the company, people are like, all the self-driving car companies in the Bay Area are going to build their own simulators.
Yes.
They're not going to buy from you. And there's only 5 of them. How is this a business? For us, our view was our customers are not only the Bay Area heavily funded AV companies, it's also the automotive industry, which ultimately needs to tackle the same problem. And we know a lot about the automotive industry. I went to the General Motors Institute. Peter's father and grandfather worked at GM for 28, 30 years. We're born in this ecosystem. And then we would go for half an hour to why the car business and autonomy in the car business is going to look very different than autonomy from Waymo and Cruise and Zoox and some other folks that are out here. Neuro, yeah.
Let's go deep in terms of sharing the learnings. A lot of investors may ask, oh, add me to your mailing list. One, should people do that? Is it helpful as an investor? Do you like those updates? Is it negative for the founder to share?
Yeah, I'll answer. By the way, you can look through the Dory questions. Oh, we're not looking at.
We are looking at Dory.
Oh, you're looking at it. Okay. I'm sorry, I haven't been paying attention to the chat. I'm trying to answer the questions in the. I don't have a high bandwidth here, so I can only do a few things at a time. So I'm not looking at the questions. I'll just assume Chris is. But just in terms of on the VC stuff, investor stuff, just remember one thing. Investors are always judging you. Anytime you meet them in a downtown Mountain View, you bump into them, they're judging you. You're a starting company, you're not a starting company, they're judging you. That's just the reality of the situation. When do you put them on a mailing list or keep them in the loop? I generally wouldn't. Now, this is everyone, your mileage may vary. I generally would, because I think if the updates are not wow, they're getting so much information that you don't want yourself to be that, just noise, rather than you want it to be signal. And signal is, I've made traction. That's signal. Now, the counter to that is, I know the investing community, and you want to actually get in their inbox a lot because you want your name to become familiar to them and vice versa. And then they feel comfortable when you do have traction, something to talk about, to talk to you. So there is a kind of example. So that's kind of roughly my view on that.
And one of the questions was about you as an investor.
Yeah.
How do you evaluate startups yourself? And how do you decide to put a trigger in making investments?
Yeah, super. That's like, could be like a multi-hour conversation on that alone. My short answer to that is, this is heavily biased for me, so this is not for everybody else. I really like technical founders. I really like technical startups. And what I mean by that is their innovation. The thing that brings to the market is a new technology. It's not a business model, like Airbnb is a business model innovation. Whereas GitLab is a technical innovation, right? It's a product that people use, right? That other engineers use for its technical ability. So I like that. I like, Bay Area folks. I heavily favor them. I like folks who've learned something about software development and launching products from a traditional house, Apple, Google, Facebook, whatever. That's contrary, I think, to other investors. I also look for, just very, kind of classically look for giant opportunities. And that's, so again, think about spectrums. On one end, let's say you're pushing, you're saying, hey, I want to build a laundromat. And the other end is I want to build an OpenAI competitor. Now, I'm going to be much more inspired by the OpenAI competitor because the laundromat can only get so big. And the margins of the investment are not there. So I'm going to take all this risk. I'm going to take that risk on the far end of the let's build a Google competitor.
So there's a lot of good chatter on the chat, and I'm reading through the Dora questions. A lot of the Dora questions are around working for a startup. Can you just answer very quickly on the chat whether should we talk more about founding a company or joining a company? And just quickly type in join company, start company, and we can look at it.
It's going to be founders. They're so proud to start stuff,
This is not helping. I think everyone can see
that. This is.
So we just split 50-50 the rest of the time?
It's mostly start. I would say it's 2/3, maybe even 3/4 startup. Starting one and some joining. But yeah, anyways, we can do whatever way you guys want. This is very free form. This is not like a.
All right, we'll tailor the remaining, let's say 5-7 minutes to starting, and let's go into a lot of questions that were submitted with people joining a company.
Okay.
So some of them were.
You do, Chris. You're the host.
Sorry, folks. We're going to do 5-10 minutes for people who want to join a company. Some of the questions around I'm not technical.
Yeah.
What kind of role should I look for to join a company? How early should it be? How late should it be? And also, how should non-technical folks position themselves as valuable to a startup?
Yeah. So all the things I talked about, they apply to non-technical roles. So full stop, right? So the stages, the markets, the due diligence, all that stuff applies, technical, non-technical. Every company, I was an MBA as well. So it's not like, I don't, I'm maybe more of a business person than I'm an engineer at this point. So it's not that startups don't need business. It's completely incorrect. I just always think about this, make something or sell something. And sell something can really mean take something to market. And that can mean in lots of different ways. So I don't think it's very different. Every company needs it. So the biggest, functions on the non-technical side are going to be sales, marketing, recruiting, HR or people, legal, like on the non-making side.
How should someone find a program manager role at a startup and at what stage?
Yeah, so program or project management or TPMing or anything like that, that is on the engineering side of the house. Typically in startups, that's not considered to be non-technical. They're just roles. Literally, there are roles out there. Just in like job codings, that the job codes from Google don't always translate clearly into every other company. So typically a product manager at Google is typically a product manager everywhere else, but sometimes those product managers are called program managers, sometimes product managers are called project managers, sometimes they're called general managers. There's all these different terms, but that's when you are engaging the recruiter and you say, what's the day-to-day about this job? What am I going to be expected to output?
There's some questions more about employment and the compensation. So I'll sort of push them through together. Lots of the discussions on employment with startups. How do I know how to negotiate worth of work, benefits? How much leverage do I have? And then another one is talking about red flags, where is it a red flag if an early stage startup can pay you to comparably to what you pay to Google? Flag in a sense that you don't want to be one of the highest paid people in the company. So
yeah, that's a real issue, by the way. That's actually a real issue. So if you come in with like super high comp, there's a little savior mentality that might emerge within the leadership, which is like, okay, this person's a top 5 earner in the company, and they better be producing like a top 5 earner, or we have incentive to have to pull the chain in 6 months. That is a real thing. In terms of your own compensation and how to think about your own worth, the fundamental difference between going from a Google to or Apple or Facebook and Google to a startup is a startup, you're somehow trying to value the potential upside. Yep. It's the rate of change of that equity. So we, as I said, a bunch of our first employees were Googlers coming from Googler compensation. And then our early employees, they're maybe barely making 6 figures and they're coming from in cash, and the equity is, of an early stage company. Today, that equity is worth a lot of money, way more than they would have ever made at Google. So that's just the risk that you have to take. So you have to know, like on paper, it's going to look a lot worse. And the risk and reward that you're trying to figure out is this equity going to grow or not? And that's the assessment you have to make. I can tell you like why this is so difficult. When I was at Google, Uber was trying to hire their first global product manager. It's like 2011 or something. And it kind of made it around the Google Maps PMs, like, hey, there's this Uber company that's trying to, and I remember it was worth about $1 billion at the time, and everyone was cynical. Oh, it's like, how big can this thing be? It's ironic now. It was like, it's become a huge company. And we all concluded, I remember at a lunch at like Charlie's being like, oh, this company's not making any money and they're doomed to fail. If you join the company at $1 billion, and the company even today is, under a collapsed market, is still like 20, 30, 40x that, you had a great outcome. You get 500K in equity, that's $20 million.
Yep.
Huge outcomes. So that's what you have to kind of figure out, is like what type of risk. And then if you go to like seriously early stage companies, you got a company that's worth $100 million, and that becomes a $10 billion company. That's a big multiple on the, let's say, only 100K of equity you might get. Because now that 100K of equity is worth, maybe $10 million.
Yep. So I know there's a lot more questions about joining a startup, folks. We will do another session around that, but I think Qasar's probably expertise is about startups, about starting a company. But before I transition to talk about launching a company, talk about your company. You want me to stay away from, I don't know.
Yeah, I can stay away.
But people want to look at Joiners Core to potentially apply.
Yeah.
Who are you looking for? You have over 100 jobs available on your job site. So
yeah.
what kind of roles are you looking for? What kind of culture do you have? I know it's listed on your website too, but
yeah, I get very awkward on having self-serving conversations. So I'll generalize this for companies that are at our stage, Series D, and have like.
And where should they find these Series D opportunities?
Go to VC websites and look at their portfolios.
Okay.
They're very proud, and they'll put their logos there, or ask around. And you might have heard of them, right? You just hear them in the kind of ecosystem.
So the question, let me rephrase the question. How should they best position themselves to apply and get the job at a Series D company?
Yeah, I think so. Look at the 100 openings, see which one applies to you. More, but probably just as importantly in this ecosystem, make sure that the company you're applying to is actually a good business. For Applied, we've been frankly, break even, profitable for a number of years, and that makes it just a better company to join because we're not doing layoffs because the company functions and we have a lot of opportunity. We're growing a lot. So that's a part of it. To look at the jobs, look at the company, and the stage. The stage is so important. I feel like joining A, B, C, D or public is just such different companies. Yeah.
Thank you. Thanks for being so humble about your own company too. Let's go back to startups that you've invested in. You also spent 7 cycles running Y Combinator's demo days.
Yeah.
You've seen a lot of success, probably a lot more failures, or perhaps not startups that have gone on a rocket ship, not that they're failures, just haven't gone to that stage yet.
Zombie startups. By the way, that's also a scary thing always to join is you want to make sure the company you're joining is not a zombie startup, which is like just not a lot of growth for a long time. It's not a bad job. And it is a very pejorative term. So yeah, I wouldn't be throwing that term around a lot. But there are companies that are they're not going to be hugely impactful.
The opportunities at the company is not going to be as much as a faster growing one, but it's still a good job.
Yeah, exactly. And the equity, therefore, probably is not going to grow a lot. And therefore, your role is probably not going to grow up. But it could still be very stable and it could be a good company. Yeah.
So talk about perhaps what you've seen in founders. If someone's looking to start a company that it will be one of the ones that do really well. Are there any traits, cultural things that they do early on that you have seen in your experience running YC demo days, your own investing? Like, what have they done at the start of their journey? And
as in like
being a successful founder versus some founder that's perhaps not as successful.
Yeah. They just as I've said before, hyper focus on the market and customers. You can get almost everything wrong as long as the customer wants your product. And you can get everything right if the customer doesn't want your product, doesn't matter. So that's the you're really looking for that.
Do you believe in non-paid design partners to start the process?
Yeah, because you are getting paid, you're getting feedback. All right, you're getting paid. You're getting paid in information.
And how quick should someone pivot from an area if they're not seeing traffic?
Yeah, I fall into that camp. I saw a lot of this at YC, which is people are just kind of hump a bad idea or a bad market for a long time. They're just going to keep thumping away, and they think it's going to work out. And most times I would say it doesn't. And that's a tough thing to say because we're just talking about generalities, but generally speaking, those companies don't make it out.
Can you talk about what's a successful MVP for a startup, where they should just go and scale and grow?
Yeah, the classic, what you're trying to do in the early phase. Now we're getting into we talk about 101, we're talking about 102 now. You've already got the company, you've already started product market fit. And even in this company, this is my 3rd company, still didn't really know what does product market fit really feel like. And even I think as hindsight, we look back at, we probably made product market fit when we were making whatever, 10 or 20 million in revenue. But still, I was very skeptical. So really what you're trying to do is you're trying to figure out, do I have product market fit? And generally speaking, most companies never get it. And when you do have it, the pithy saying is the product is kind of being pulled out of your hand. There's so many users, so much demand that your ChatGPT has product market fit. The fact it's always down is evidence that it's product market fit. Yeah.
There's a lot of people who want to do a startup in this area, but it's so expensive, people to support, loans to pay.
Yeah. You have kids.
What advice do you have for people who are in a camp? They want to do something, but the cost burden is pretty high.
Don't do it. There's a reality of living life in the Bay Area and paying rent and your kid's school and all that stuff. And if you can't get a certain cash compensation, which is going to be lower at startups because they're really compensating equity, it doesn't make sense.
So they just try 1 or 2 years, or should someone really think
if you have savings,
committing 4 years?
Yeah. It depends on your partner. It depends on your financial state. If you were, you worked at Google for 10 years and you bank $3 million, you can absolutely take a couple of years as long as you're not burning money and you live an expensive lifestyle. I mean, this goes back to like more even outside of the professional realm. How should you be living? And my general is like, I'm very frugal. I've always been. And because I never want to be beholden to somebody, you know, putting their thumb on me and saying, you got to work this shitty job because you need a paycheck. And I've always been, that's like the red line for me. I never want, I grew up poor. I never want to be in that situation. So I've always kept my like consumption really, really low. So one of the realities of the situation is if you want those startup opportunities and you're using a lot of money, stop using a lot of money. Literally move into a shitty place. If you're, you know, obviously there's different family and singletons, get a cheaper cost of living. Lots of great places in South San Jose to live in where you're not paying $4,000 a month. Now, if you have a family and your kids, it's fundamentally different. You can't do that. As I do, right? You can't do that. And therefore you have to think about, okay, is my spouse, maybe you need to go to work. You just have to have this practical, pragmatic reality. It's like, you just can't get everything that you want. That's just the reality of the situation.
You've mentored a lot of founders, would-be founders. What haven't we covered today?
I mean, today was maybe more than any talk we've done in the last, 10 years or 8 years, I should say, more all over the map. Because I think we're trying to hit a bunch of different constituents in the chat.
We're usually more organized, folks, but we want to make sure
we're covering a lot of people. We're covering people starting a company, people joining a company, people who are newly, maybe laid off at Google and how you should navigate the work environment. The area that we haven't covered enough within those buckets, I don't know. I think the biggest concern I have for people who are like, I was saying this to Chris before we started. If you quit the Thursday before the layoffs or you were laid off on Friday, the outcome is the same, but one person is like emotionally, okay. And the other person is shocked maybe. And like having some PTSD for a long time, maybe for the rest of their career. And so I think maybe worth talking about a little bit about is like the reality that these are just jobs and Google is just a corporate entity. And I've always said this when I was at Google, and I say it about Applied, which is this isn't a religion, this isn't a country, and it's also not a charity. And so what I mean by that is you should get compensated, but at the same time, there's no obligation for you to get compensated. And so it's just it's just cold water hitting people because especially if you only worked at Google after undergrad, you lived in a very unique environment, and you just have to recognize that's just not vast. That's not the reality for 99% of humanity. And
we feel for the people who were impacted, we are going to organize more sessions. I'm just reading the chat over here. Can you talk more about how should people really be able to take the time?
Yeah.
Before thinking what's next and not right.
I absolutely would do that. I mean, I think, when I heard about that stuff, I know if I was that person, it would impact me very deeply because it's part of my identity. I'm proud.
But how do we not make it our identity? That's the problem, right?
I know it is. I'm just saying, I'm giving you the example of I'm already there. So then how do I fix that, right? Of course, Thursday before somebody tells you, don't make it your identity, and you're like, become some robot and suddenly it's not your identity. That's not, I'm just talking about in the situation. Let's say you're already in that situation. I would take time off. Absolutely. Hopefully you've saved some money and you can take 3-6 months off. I think it's completely good. Now the natural reaction is going to be, well, if you don't have the money to do it, you can't take time off. Just get a job and get whatever job you can get. We're beggars can't be choosers. That's just the reality of the situation. If you have saved up money or your partner works or whatever the situation might be, or you're mobile and you can literally just move to a low cost area, I would do those things. And I would take 3 to 6 months off. It's because there's no way this doesn't impact you emotionally, even if you're like, I'm above this. So you've had to, perhaps at Google, maybe here, mentor people who are on the edge of burnout, people who have burnt out before. I've been on the edge of burnout. So I don't need mentor people. I could have a conversation with myself. Yeah. How should people recognize it themselves? Some people on this may not even recognize that that's them. A good example, prepare themselves as well so they don't get to burnout. Yeah. A good example of burnout is you live in a very fortunate environment and you don't realize it. You live in this sunny weather and you are completely safe and you get to work with interesting people who respect you. And you're just like, somehow that's not, you want something more. And that's an evidence of burnout. There's like lack of appreciation. It's not always the case, but that's evident. You just don't, Sunday night, you don't look forward to Monday. it brings you anxiety. I think it's called Sunday scary, Sunday scaries or something like that. That's evidence of burnout. Yeah, you're not looking forward to things, evidence of burnout. Like really the right healthy relationship with work is one that this is my, again, view. Now we're not talking about everybody, talking me, is I'm pushing myself as hard as I can. And I'm enjoying my family and I'm enjoying my friends and I'm enjoying traveling. But for me, I work 7 days a week. For me, that's what I've always enjoyed. And if I was working 5 days a week and having to come up with hobbies for the weekends or something like that, that wouldn't be enjoyable for me. So each person's going to be different. So you have to find what's going to make you really happy.
And so how should we recognize potential burnout in our friends, our colleagues, and how should we reach out appropriately?
That's a really tough question. I don't like to get in other people's business. Maybe that's a part of it. As in you don't want to misassess.
So how should we appropriately do that to our friends?
I think to help. I think, the signs there are you just get lunch and dinner and they just don't seem themselves and just having like, hey, what's going on in your life kind of thing. But if you're real friends, they should be able to open up to you and say like, hey, I'm not, it's kind of like the equivalent of being in a bad relationship. How do you know a friend's in a bad relationship? Well, you can see some of those evidence. And now are you going to talk to them about it is a very different thing.
So on that note, I know someone is organizing a post session after party to join that new link. People who want to stick around and meet other folks and network more. We're going to wrap up in the next 30 seconds. And any final words for the community here along the topic, making the transition from Google to startup land?
Great community, use it. Know that life outside is different and prepare for that, whether that's in expectations or compensation or location or role. Don't beat yourself up on the stuff. I think it's just I guess one way to think about this is the counter, which is like if you get a job at Google, there was a lot of luck involved, right? You had to meet the right people, you had the right education, you had all this stuff. You get laid off, there's a lot of random luck involved as well. You're on the wrong team with the wrong manager at the wrong hiring cycle at the wrong whatever. So even if you're fortunate, don't get too self-absorbed about it. And if you're unfortunate, don't get too self-absorbed about it.
Thank you. On that sage final words, everyone, you can tell why I come to Qasar all the time for sage advice and why I went to him back in 2015. Thank you for spending time with us and sharing so much information and being so blunt. Please don't take his comments out of context. He's never allowed me to record this. He'll never let me do it again if it's tweeted about Qasar. X
exactly. Please. No, I'm just trying to be helpful. Sometimes people, whatever, take it the wrong way. Thank you guys. Always fun.
Enjoy the rest of your day. Reach out with help with anything.
Yeah, thanks. Take care. Bye.
I'm also going to